Hello, everybody. In this moment, we are talking about income taxation system in Indonesia. With the current global condition, emerging market countries are the latest investment destinations, and Indonesia is no exception. Suppose you are planning to open a business in Indonesia. In that case, you may know that the overall process can be quite a hassle due to bureaucratic and legal markets in the taxation in Indonesia. Like many countries, Indonesia operates a self-assessed taxation system divided into state and local taxes. State taxes include income tax, consists of corporate, individual with holding, and then VAT or value added tax, stamp duty, and customs tax. Local taxes are mainly related to commercial subjects such as property, vehicle, promotional, and leisure activities. Therefore, Indonesia's income tax system is applied to individuals and corporations. The first taxation in Indonesia is corporate income tax in Indonesia. To understand corporate tax in Indonesia, the location where you establish your business is vital because it will define whether you'll be taxed as a resident or non-resident company. Therefore, a resident company is defined as a company that is incorporated and conducts business activities in Indonesia. A foreign company with a permanent establishment in Indonesia is imposed tax obligation the same as a resident taxpayer that must follow the taxation system in Indonesia. On the other side, a non-resident is a foreign company incorporated overseas but acquiring revenue from Indonesia. Therefore, there would be plenty of benefits as a resident company. For instance, you could receive income tax relief when you do business in high priority sectors or specific geographic areas. It means you would be eligible for a reduction in net income up to 30% of the amount invested, prorated at 5% for 6 years of production. And then the second types of taxation in Indonesia is personal income tax. For individuals, the personal income tax rate payable for annual income are 5% for income up to 50 million IDR, and then 15% for income between 50 million and 250 million IDR, and then 25% for income between 250 million and 500 million IDR, and a flat rate of 30% for earnings exceeding 500 million IDR. And then we move to value added tax, or VAT. The value added tax, or VAT, involves the transfer of taxable goods on the provision of taxable services in Indonesia. Events or services bound to pay VAT are the first, delivery of taxable goods by an enterprise; second, import of taxable goods; the third, delivery of taxable devices by an enterprise; the fourth, use or consumption of taxable intangible goods or services originating from abroad; and the fifth, export of taxable goods, and then consists of tangible and intangible or services by a taxable enterprise. The VAT rule in Indonesia is 11%, and then however, the exact amount may be high or low, with figures ranging between 5% and 15% according to government regulations. VAT on the export of taxable tangible and intangible goods, as well as the export of services, is fixed at 0% with certain limitations. And then we move to luxury goods tax. Indonesia's taxation system also involves the sales tax for luxury goods. The luxury sales goods tax is better known as LGST. Imports of certain luxury goods and items like cars, houses, and apartments will be subjected to LGST. The current LGST rates are between 10% to 125%. The maximum allowed by law is 200%. And then we move to customs and excise tax. The law in Indonesia does permit import duties to be between 0 and 150%. Based on the custom value of the goods imported into the country, currently the highest tax rate is 40%. Thanks to the several free trade agreements signed and a more globalized economy, import duty import duty rates have lowered significantly. Certain goods from specific countries are subject to an anti-dumping import duty rate. And then, what are the tax elements? It is essential to maintain the accounting records in accordance with the prevailing accounting standards to calculate taxes correctly. Proper account maintenance also helps in easy and quicker Indonesian tax audits. The many different tax elements have to be calculated individually and fixed separately for each filing period. A tax audit, if necessary, will be for each specific filing. The most common taxation elements are carbon tax, corporate income tax, individual income tax, withholding tax, and vinyl tax, value added tax, and luxury tax. And then, what are the penalties for non-compliance with income tax regulation in Indonesia? And then the first, failure to file an income tax return. If you fail to file an income tax return in Indonesia, you may face a penalty of up to 2 times the amount of tax due for the unpaid period. And then, underpayment of taxes. If you do not pay the required amount of taxes due, you may face a penalty of up to 10% of the amount due. And then, late payment of taxes. If you pay taxes late, you may be subject to a penalty of up to 5% of the amount due. And then, failure to keep proper records. If you fail to keep proper records, you may face a penalty of up to 100% of the amount of tax due. And then, fraudulent tax evasion. Fraudulent tax evasion is a criminal offense in Indonesia and can result in imprisonment of up to 5 years and or a fine of up to 5 times the amount of tax due. And then, I think enough for this moment. And then, thanks for watching. Don't forget, give this channel your like, comment, subscribe, and don't forget share. Thank you.